Good morning, everybody. This is Dennis Wilburn with the Active Trend Traders, and joining me today is David Grandy from All About Trends. How you doing, David?
I'm doing very good.
And David's partner Harlan is online, and we've got him kind of sequestered to when we can roll him out when we need him to provide some color on what's going on, what he sees going on in the market. David, it was great getting to present with you last Tuesday night at Englanders Pub.
Yes, it was, and thank you. A lot of our subscribers were there, and thank you for coming out. And thanks to Bobby, who's the organizer of that group too, for allowing us to speak. We thoroughly enjoyed it. Just another opportunity to go out and talk stocks with good people. So
That's right.
We're always down for that.
And yeah, you were mentioning that we were competing a little bit against the Giants, but hey, you can always record the Giants and watch them later. You know what I'm saying?
I do know what you're saying, but that might be a hard sell to some hardcore Giants fans.
Without a doubt. Anyway, I want to welcome everybody here today. I hope you enjoy what's, I won't say enjoy, because sometimes when the market goes into its palpitations, it can cause some consternation. And it's in one of those kind of moods right now. Anyway, I'll remind everybody that all the materials we present here are for training purposes only, and that we strongly suggest people paper trade any new method prior to risking their own capital. Let's get started. As we were saying, David and I were at the, and that was the Bay Area Stocks Options ETF Investors Meetup. And if you would like David and I to plug in at one of your meetings, or if you know somebody who has meetings, no matter where you are, we can do it live webinars or whatever and just talk about. And we've got put together this awesome presentation called The Art of Trend Trading. And it is similar, but in a little bit more depth than the How to Make Money Trading Stocks show which you're currently on. But just let us know when and where. And so I went searching today, David, for this graphic that I've kept in my file for quite some time. How do you ride a bear? Well, the same way you ride a bull, in the direction it's going. Now, I'm not saying we're going to go fully into a new bear market, but the weakness is showing up, and it's flaky weakness. It's like concerns over, like Ebola, concerns over, well, there's rumors that Europe may go into a recession next year, all that kind of stuff, and so it's very reactionary. I like what Mike Gibbons says and say here, we cannot direct the wind, but we can adjust our sails. And so typically when we adjust our sails, it means we may get stopped out of a position really quick, faster than we wanted to, but we maintain our goal of minimizing risk and maximizing our reward. And sometimes that means just stepping away from the market and being almost 100% in cash. Are you guys almost all in cash right now, David? David? Oh, David.
Sorry about that, Dennis. I was on mute. We have 4 positions, so we're mostly cash. We're only about 20% invested.
Okay, and I'm about 20%, somewhere around 20% invested too right now. And we have another David who is online with it, and he says, yeah, he's totally in cash. But let's take a look at where we were last week. I always like to keep this this bottom section here because it tells you exactly what we were talking about last week. And last week the question was, is correction to a relief rally, because we got the couple of up moves Thursday and Friday of last week. Is it a sucker's rally? And as it turns out to be, it was. This week, what's obvious from the chart is that we're deeper into a correction, but we're looking for a place to bounce. But what does that mean for us? On the S&P, the trend channel currently is broken, and so we may be moving into a sideways move, and we'll see that on the charts a little bit later. The NASDAQ 100 is still living within that expanding top we have showed over the past couple of weeks. And then the Russell is extremely oversold. It blew past its lower support level this morning, where one in a stronger market in the past, and I made a little note to myself that in the past what would happen was basically go down one of the support levels and immediately bounce. But when what has happened, or what has, the pattern of the past is not repeated as we expect, it's a clue that the overall, sometimes the overall character of the market can be changing. Outside influences. I almost wrote straight across here, worry, 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 but worry, fear, and is it reaching an irrational level? There's a lot of the talking heads talking about going into correction. Harlan was chatting with us a little earlier today about the talking heads today were saying, well, we're going into correction, and heavens, guys, if you've been with us for the last month and a half, we've been in correction. The Russell's been in correction for almost 2 months. And there's been weakness in the S&P and the NASDAQ over the last 2 months also, so you would say that if the market wasn't in a correction, it was at least definitely softening. One of the, this is my index that shows basically the percentage of stocks in the NYSE above their 20-day moving average. And every time it typically gets down here underneath the 25% level, it would bounce and put on a very nice tradable rally. This last little, and when I checked into this morning, this was down here about 16 or so. Look what's happened over the last, almost 2 weeks now. It's been living down in this area. Below 25%, which is showing us that right now the buyers and the institutional buyers aren't really interested in buying, and I'll put the caveat on that, yet. This can go lower. Back in the correction of 2008, it did get down to less than 3% of the NYSE stocks above their 20-day moving average. It did a little bit of a bounce there, then actually went lower before it bounced and went into a real nice tradable rally towards the end of 2008. So what we're looking for is, I don't use this necessarily as a trigger, but I start looking for bottoming formations and bottoming candlestick patterns when this happens. And as we go to the charts of the indices, we'll get rid of Tesla for a second here. Let's go to the S&P. Okay, the S&P, as we indicated earlier, it was also working inside this expanding top. Expanding tops tend to be a bearish type of pattern, and sure enough, we basically violated it to the downside, and it's kept violating, as all the moving averages now are with the, and we're all the 50, the 20, and the 8 are all pointing in the down direction. The 100 is still pointing up a little bit, the 200, and it appears that if we continue here, this will be an important level of support if we make it that low. But also the uptrend channel that we've been watching now for almost 2 years was in fact violated to the downside, and we'll see if that maintains the breakage, or oftentimes when you get a trend line like that, you'll get a little up move back to the trend line, and then I think the Warden brothers coin the term, it kisses the trend line goodbye before it falls. Now, I'm not saying that that is exactly what is going to happen, because the market's going to do what the market wants to do. We could also get a picture of it bouncing here, close to the 200-day moving average, and then going into a really good consolidation zone, and then before moving up higher into the end of the year. The question is this going to be a good, tradable rally? Will we make it back above the 50-day moving average? Right now, it remains a open book. Let's look at NASDAQ. NASDAQ is, there we go. NASDAQ has got a couple of things going on, and I'll blow this up just a little bit here and get rid of that. One, NASDAQ now is, it's still operating within this expanding top. It's come down and fell below its 100-day moving average after it dropped this support at the 4,000 level, 3997 to be exact. And this was the line of demarcation we were looking at earlier in the week, that if it breaks below that, we have some more downside. And sure enough, we broke above. Big wide range day, followed by yesterday, big wide range day. And when you get these big wide range days, when you're in, it basically is not indicative of a real strong market, but one that is very indecisive and very much going to be whipsawing us around when we're trying to place trade, because a lot of times there's no great stability, because I'm looking really for small bodies to place a trade on, and so it can make it challenging to get into trades. But NASDAQ oversold, momentum's down. On the weekly charts, we are still looking at, it looks like it still has some momentum left down to the downside. We may revisit this uptrending line or come close to it before we get a rebound as this kind of bottoms out. But it does look like this candle today is a long-legged spinning top, which shows there's a lot of indecisions. Sellers came in when it got back up here into this resistance level, drove it down. Buyers came in at the logical support area and drove it back up above the 100-day moving average for the time being. The Russell. The Russell is the index that I love to hate right now. No, we just got out of position this morning. We were whipsawed out of it. But what's Russell done? You've got this trend line here. We have made a lower low, but we're still working within, and what has happened is the support zone has moved down, and it's still in effect. And one of the things we could be looking at is looking for a potential shakeout as this seeks a bottom. And I think that on a longer term basis, looking at our indicators over here on the weekly chart, that Russell seems like it is getting closer to where you would anticipate and expect a reversal, but we don't have the indicators, or don't have the price action indicators in place yet for that reversal. We thought we had one yesterday as it was doing a little bounce off the midsection of this large candle, which is oftentimes a strong level of support, but as you can see, it blew past that, and then today fell down lower and now has popped up just slightly. And so we're looking basically on the Russell for it to prove that this is a lower low that it's going to hold. And so that may be some retesting down here at the 1059, 1060 level, or even all the way down to the 1055 level, and see if it'll start bouncing up and doing a very constructive consolidation pattern down here. But right now we're working off lower lows, lower highs, definition of a definition of a downtrend. It's been going on for quite a while. We currently off of this high here, its low today was down 10%, almost 11%. And if we go to the high for the year, which is approximately over here, it had actually fallen for the year about 13%. So clearly in correction on the Russell, but very, very extremely oversold. It can get more oversold, but right now it is oversold and looking for a place to turn around because it's already found the place to fall apart. So, David, that's what I've got right now.
Excellent. Thanks a lot, Dennis.
And I'm going to bop over to you. Folks, if you have any questions, go ahead and type them in. We will review a couple of stocks at the end here. And I'm switching over to David. David, you got the screen.
Thank you, Dennis, and I think you did a really nice job of, looking for order in the chaos, and that's exactly where we find ourselves because it has definitely been a chaotic market, roller coaster. This is kind of what the market's been like the last couple of weeks. Up, down, all around we go, and the net result is it leaves you feeling like this. And but there is order in the chaos, and that's what I'm going to go through here too. As you see with the NASDAQ, thus far we came down, we touched the 200-day, and we're getting a lift off of that. So there's some order there, and then as far as the S&P goes, we've got multiple Fibonacci levels here. We also have the 200-day not too far down and lateral support at this blue line. So we're definitely what we call in the zone here where there's definitely support levels. It's really hard to go out and justify going hog wild on the short side, even though that's very tempting right now. There's just, when we look at charts of leading stocks, we see a lot of stuff on the long side that we can go out and do now. I don't see a whole lot of structure on the short side, and in order for that to happen, we really need to see a meaningful bounce here that lasts more than a day or so and takes us back up to a resistance level like the 50-day moving average, and that will set up a lot of short sell setups. So really the best thing right now is just to sit tight and let the market do that, and if it does that, we'll see what the patterns of the stocks look like at that point. But for now, we're just going to work with what we have, knowing that we are short-term very oversold. We've got some major support levels here that are probably going to get defended at some point. There could be a capitulation low that we have to be on the lookout for. But believe it or not, too, there are leading stocks that are actually holding up very, very well. And just to refresh our trading plan here, we don't chase stocks. We let them come to us. We buy support and sell resistance, and we short resistance and cover out support. And we're just trading what we see, not what we think here or fear, particularly right now where everyone's talking about what you were talking about, Dennis, with the potential recession in Europe and diseases and all kinds of stuff. For us, it's always about the charts. And even when the indexes are down, leading stocks still, we're seeing a lot of leading stocks hold up pretty well. And that's how we get our gauge with the market. It's all about stocks. It's the market of stocks. So we talk about this every webinar, the 3 things you need to know: uptrend patterns and how to trade them, downtrend patterns and how to trade them, and change in trend patterns. But we also talk a lot in webinars about why we don't go out and buy breakouts. However, there are some times where buying a breakout could be a good thing. A traditional breakout, a stock that's formed like a flat base, that stock that's in an uptrend above the 50-day moving average, just traded sideways into the 50-day and is about to break out. There are times where that could be advantageous, particularly right now when the market is so oversold. It's a much better time to buy a traditional breakout than after the market's been making new highs consistently for month after month after month and is nowhere near any meaningful support. So there are a couple stocks that are setting up really nicely for traditional breakouts. Gilead is one of them, where you have a very nice uptrend here, been performing very nicely, a little shakeout here, but really holding up very, very well, has completely ignored this correction, or whatever you want to call it, and it's staying above the 50-day, trading very tightly, and you know, if you bought the breakout here at 110, 111 or so, you know, support is only a few percentage points away. So that's what we like. If we're going to buy a breakout, we want to make sure we do it when support is close by, and that's what we have here. And the fact that it's held up so well shows, you know, excellent relative strength, and definitely the type of stock we look for. Celgene's another example, same thing, nice uptrend here, trading fairly well, a little short term oversold. If the breakout point is only a few percentage points away from the 50-day moving average, as well as a couple lateral support areas here. So there are times where buying breakouts makes a lot of sense, and we actually have these two featured in our newsletter, and they're tops on our list right now. The other thing we talk about in every single webinar is trade size risk management, and why we don't go out and put 20% or more of our portfolio in any one position. We're a little more conservative. We only put 5 to 7% of our position, or our portfolio, in any one position. We rarely are more than 50% invested, and the reason we do that is because if you have a bad day, or you have a situation where there's a news-driven event on a stock you own and you have no control over that, and the stock's down 10%, the overall impact to your portfolio is only 0.5%. And that is the case with a stock that we featured, Avago, which fell pretty strongly today on a news-driven event. But thanks to trade size risk management, we're down 9% in this position. But you know, the overall impact to our portfolio is less than 0.5%. And so while it's not fun sitting here with this, it does allow us to remain emotionally centered and not, you know, feed into the sky is falling, I better sell right now. It allows us to give the stock a little bit of time to work its way back up here and get out at a much higher price and a much smaller loss because of the trade side. Now, if we had a big, you know, position in this stock, then yeah, it would be a really bad day, and it would be very emotional. It would be very easy to sell into this fear, and that's the last thing we want to do, is go out and sell into a major fear on either an individual stock or the indexes. So so we're just sitting tight with what we have, and knowing that the indexes are at some support levels here, and the odds favor us moving higher in the short term versus lower. We may see a little bit more to the downside just to do one more shakeout here, but we're pretty close. And so odds favor that we're going to come out of this just fine, and we're going to have some really good setups on the long side, and then we'll see where the rally takes us and what that does for leading stocks, and if that sets up some good short sells. But that's the game plan right now. So like I said, we're just working what we have. It's a market of stocks. We're just continuing to look at the charts of leading stocks and do what they tell us to do. It's always going to be about the charts of stocks and not so much about the indexes. If you'd like to see how we're trading this roller coaster, you can sign up for a 15-day free trial. Just all you need to do is go to our website and tell us what email address you'd like the newsletter sent to you. You'll get all the newsletters, all the trade alerts, everything for free for 15 days. And there's no credit card or anything required. Just tell us where you want it sent, and we'll be glad to send it over to you. And that's all I have, Dennis.
David, thank you. There was a question that came through on APCO. Do you know what the news-driven event was? Does it apply to all chip manufacturing stocks? That's the question.
There was another stock in the industry that came out with some bad news, and it's taking down the whole sector with it.
Ah, okay. So it's a what do you call it?
It's a sympathy trading.
There we go.
Type thing. Yes.
Yeah, cool.
Yeah.
And so
nothing Avago did. It was their industry peer, Microchip.
Yeah, one of the things that is really, really critical is you look at, whatever your watch list looks like. We do, I develop a private watch list that's pulling a lot of the strong stocks off the IBD 50 that I either have weekly options and or no weekly options, or a little bit some of the lower priced stocks. But one of the things we look that I look out personally is that how many are trading, not how many, but which ones are trading above the 50, which ones are trading below the 50. The ones trading above the 50, when the market's doing what it's doing today, is showing abnormal strength. And so typically those are the ones we would want to go long in if the market starts to bounce. Remember that when the market is going down, somewhere between 65 and 70% of the stocks the stocks that are out there are going to travel in unison with the market, whichever way it goes. And so let's wrap this up, and we'll go into our stock review. Yeah, so just let me wrap things up here. The active trend trading system is basically for any market condition, we show and teach people our members how to know what to trade, and typically it's high quality IBD growth stocks and or let me show my screen. Okay, active trading system for any market condition, up, down, sideways, and we have teaching webinars on Wednesday nights, and we show folks what to trade, and we typically we do top quality IBD growth stocks and or the leveraged index ETFs to the long side. We show when to enter, when to exit, what strategy to use, and what to expect. Here's how we've done. We've taken a little bit of hit in the first part of October, but this basically, we divide our trades into an income generating trade and a growth, capital growth portion of the trade. And here's how we've done. June was they've all been good months. And the thing about it is this loss that we took today on both TNA and a couple of other trades that we've had just the first part of this month, we've still mitigated, and we're down like it's 0.5%. It's a 0.5%, David. Part of that has been due to mitigating it with, we're not heavily invested in the market. And here's what our accounts that we track have done so far this year. And our target for the active trend trading system is a yearly goal, 60% winning trades, and a yearly return of 40% or greater. I'll just leave this up for a moment. You can check it out this is posted up on the YouTube channel to let you know what is included within the premium and the basic subscription. We also have, as part of this, if you choose, you can also get notification on option trades and specialty TNA trades. And so, David, that's all I have on that side today. I'm ready to start looking at some stocks. Hold on a second. I haven't forgotten you, Harlan. Harlan,
Hi, I'm here.
I know you're going to want to do the stock reviews, but anything, just insight on what's going on with the market and that kind of stuff before we sign off.
Well, I guess I got a couple of things. After what David said, I mean, you can clearly see why me and David are partners. I mean, he literally took the words right out of my mouth. You would think I'm sitting in the same room with him versus halfway across the nation. So I have to mimic exactly what he said. And, I mean, we're getting into that magical time of the year, so easy. It's so easy to get consumed by, Chicken Little, the sky is falling. What am I going to do? And usually that starts to enter your psyche just as it gets darkest just before the dawn, which is the flip side of it's always brightest at its peak. So we're kind of in that storm before the calm, and that's good. And that leads to, typically, historically, this is that time of the year where the markets tend to bottom out. And then we get some sort of run into the end of the year. To what degree, I don't know. But, maybe we just kind of chew around in here and carve out a low like we did last couple of, like the April, May, end of April, May.
That's right.
In the S&P and NASDAQ. So, I really wouldn't fear it. because right now you're fearing it after the fact, after a lot of stocks have fallen off of the cliff. So you're better served to start to think forward on where can we go from here. And David laid it out. You know, Celgene, GLD, you know, we have a slew of other stocks that have been in corrections for 2-3 months already that look as though that they are putting in bottom of cup formations, and you know, that's one of our favorite trades. When they start coming up the right side of a cup, that's when we want to jump all over them. So so we're already thinking forward about this. We trade what we see. We see a lot of good stuff developing, and we're just not seeing any reason to get highly emotional about this. And that's the beauty of always having a strong cash position and very small positions. It helps to allow you to not start screaming on the roller coaster when it's not the roller coaster of love for you.
Exactly. And I like that graphic that David had earlier about what happens when he gets off the, I don't know if that was David, I don't know if that was a caricature of David getting off the roller coaster or not. Was it David?
It wasn't me.
It would have been if I was on that one, yes.
Okay. Anyway.
Well, you know, that brings up an interesting point, Dennis. I'll try and find it for next week. But I can remember reading a book, and two guys were staring at the ticker tape, and they were saying, geez, if I haven't lost all my money, this is definitely the time to buy. You know,
yeah, I got it.
You know, in the face of fear, when nobody wants it, this is the only industry, when things are on sale, this is the only industry in the world I know that people avoid it like the plague. But, you know, if Target throws a 50% off sale, you know, everybody's there.
Yeah.
So, you know, I don't get it. So it's all about perspective and where you fall into that and managing our emotions.
So, well, thanks, Harlan. And David, thanks a lot. And we'll end the recording portion. I just want to remind everybody, have a great weekend. Next week I will be with everybody, or with David and Harlan, but I'll be 2,500 miles away to the west. And hopefully I have the pleasure of presenting to the Honolulu IBD meetup group next week, and so I'm excited about that, and reinitiating my, you know, we lived for almost 13 years in the islands, and it is still home to us, and so I'll remind you, keep growing the egg, trade wisely, trade profitably, and if you need to contact either David or myself, here's our personal information right here. So thanks everybody for joining. Hang on, we'll be reviewing stocks shortly.